And I am our Director of Marketing here at the James J. Hill Center, and I've been working with a number of people, including Kathy and Bob on the panel and Brad back here, to put together some of these funding discussions. This is our third discussion, and we started with bootstrapping and early stage investment, and then we did non-debt, we did invoice funding and SBIR grants, and now we're on to debt funding. We have a great discussion lined up for you today, a wonderful panel, and right afterwards we're going to go right into 1 Million Cups St. Paul, which is our weekly startup pitch event. We do have two startups. Luke from Abimath, who actually came a year ago and is coming back because the information you gave him a year ago helped him pivot his company, and he's on a new trajectory. So I'm really excited to have him here. And then I'm going to pitch for you today. So I've been up here for almost a year in front of you introducing other startups. James J. Hill Center, we often say, is a startup, and so I'm going to also pitch, and I'll be pitching about 9:30. So I hope you can all stick around for that. And with that, I am going to turn it over to Kathy to introduce herself and introduce the panel.
Awesome.
All right.
Hi, everybody. I'm Kathy Sadaka. I am with Sage Business Credit. We are an alternative to bank financing, but I'm here to talk about bank financing today and real estate. I'll do a little introduction of everybody on the panel. Let me go in order. Sorry, you guys sat out of order. John Milbauer here is Vice President, Commercial Lender at Drake Bank. He's a graduate of the University of Wisconsin-Whitewater with a BBA in finance. Began his banking career in 1978 and has held numerous positions in several banks. He served as a commercial lender for over 35 years and is focused on lending to small businesses. He's presently a vice president, commercial lender at Drake Bank, and continues to work with small businesses, ranging from startup to multi-generational. He has also been He has seen his customers grow from startup to multi-million-dollar operations. Banks should have a role in the success of business, and he enjoys filling that role. Then we have Paul Flood, Senior Vice President and Regional SBA Manager for Bremer Bank. Paul is, sorry, I'll skip over that, I'm repeating myself. He consults regularly with business owners from a variety of industries to recommend and implement strategic financial solutions. With more than 2 decades in the financial services industry, Paul's roles have included relationship and portfolio management, business development, operations, and customer retention. And then Bob Cohns, commercial real estate broker. He's an educated deal maker focused on commercial real estate acquisitions and representation of both buyers and sellers. He has over 20 years engineering transactions. He's created a breadth of underwriting experience in office, industrial, retail, senior housing, multifamily, and land development. As a super generalist, bringing value to a customer's business vision has propelled him to being a trusted advisor. So, just as an icebreaker, let's go down the row and say what your first job was ever.
My first job ever was mowing lawns way back when, but we're not going to count that. After college, I started out at a large multi-bank holding company as a management trainee, spent 2 years, worked in every department of the bank, and including, I think, at sometimes being the janitor. So I've enjoyed banking. I've always wanted to be a banker because I enjoy working with people.
Nice.
My first job was 10 years old. I carried newspapers for the Minneapolis Star Tribune or Minneapolis Star at the time. It was an afternoon job. Got done with school, and at that time they had an afternoon newspaper. Get done with school and deliver newspapers, and then early Saturday and Sunday morning.
See, my first job, a similar situation here. My brother got a job for the Minneapolis Star Tribune, or whatever, maybe it was Tribune at the time. And Moorhead, all over South Moorhead, getting up way early in the morning every day. 2 weeks later, the local newspaper, Fargo Forum representative came to me and said, we've got 80 papers 2 blocks away from your house, and it's an afternoon route. Hello, thank you very much.
Awesome. Okay, I have a pile of questions here, but this is for you. So if you have questions, pop your hand up and we'll go switch to you. Paul, let's start with you. As a new business owner, when is the right time for me to apply for a business loan?
It's really different for each individual. What I think the most important thing is to have the plan, your plan or your description of your business pretty well polished and pretty well ready to be delivered. And that includes maybe having somebody else take a look at it, a trusted advisor, say like an accountant, or if you have somebody in the legal field or maybe in the financial services field, to review that and make sure it's something that really represents your business and your long-term goals and intentions.
Okay, John, what kind of information will I need to pull together for that process?
Piggybacking on what Paul just said, when you come in, if you've got that plan, you've got the ideas of what you want, we're going to need a current personal financial statement on you. We will be looking for 3 years personal tax returns. We'll be looking for that plan. We're going to be looking for some budget projections. All these things make it very easy for the banker to begin working with you. We can't write your plan for you. We can't tell you how to run your business, but we can sure work with you and help you polish that plan so that when it is finally presented, both you and the banker have a great idea of what you're looking to do and how you're going to accomplish it.
Okay. Bob, what kinds of things does a commercial real estate broker do?
Well, we help you in the overall concept phase, but we also help you leverage your ability to get a lease. A lot of businesses need real estate. Some businesses don't need real estate, but a vast majority of them do at some point. And so a lot of early stage businesses don't understand that your first major creditor is really your landlord. And your landlord has got a ton of flexibility. You don't necessarily need to be a credit tenant. You don't need really anything, but you need to have character and you need to have hustle. Okay? And if you can convince a landlord to be, quote unquote, your partner, that goes a long way in being able to work with banks and other lenders and customers. So it's a situation that landlords are there to build businesses to a large extent, and a lot of people don't view them that way. They view them more as a residential type landlord. So there's many different types of landlords, and you need to be able to find a venture landlord as an early stage business. And many of these people have substantial financial resources, but they also have vacancy, and they're there to build income stream. And if you understand that, you're going to go a long way to launch your business. And I just really encourage everyone to start, because landlords are probably your first, and I shouldn't say the easiest way to get started, but that's a definite big asset.
Yeah.
I have a question to follow up with Bob. Bob, could you? So are you saying that as a startup that's looking for a space, I can negotiate with a landlord to get subsidized space? Is that?
Well, absolutely, because you have to understand that they're getting zero rent right now. But at the same point, they want to see a tenant that long term, after they invest in you and your business, that you are going to be a bankable asset, so that they can add you to their portfolio of 20 other tenants, and then they can create an income stream that their banks are excited about.
John, you have a follow-up to that?
I spoke last week with a startup business that I've been talking to for months, and they called and said, after we got some publicity, we were contacted by the owner of a building that's going to be vacated, and they said, it's for sale, but forget the sales price, we'll take half that, simply because we'd like you to be in the building, and we like the product and the business model you have. So I agree, there is always opportunities to negotiate with a landlord. They want their space rented, they want to see you succeed, and they're going to be willing to help you. One comment I want to make on the question Kathy asked me before about what do you need. Businesses don't plan to fail. Businesses fail to plan. So when you come into the bank, you need to have a good plan that you understand, that you can convey to us, and that we can understand. That's how things get done, is through that communication. Thank you.
You again. Does every bank have all the same products, as particularly ones for a new business? Is it sort of a bank is a bank is a bank, or?
I think I'd have to answer yes, that's pretty much the same. We all have different products. We all have green money. We all have the same services, checking accounts or checking accounts. You build the relationship with your banker, and that's really important so that you have him on your side and working with you. But an SBA loan is an SBA loan. A commercial real estate loan is a commercial real estate loan. A term loan where you make installment payments on your debt is a term loan. The conditions and qualifications may vary from bank to bank, but I don't think anybody's invented any new products in the last few years. So.
Okay, so Paul, then on top of that, what factors go in? Oh, I'm sorry. Do you want to take that?
Sorry, I just had a question about term loans and things. Do you ever work with people on amortization schedules to pay down principal faster?
Sure. One of the things that has to work when you're putting a loan together is you have to be able to afford the payments, and we have to work with you to make sure that fits in our model. And a lot of people want to term it out longer than actually what they need to. By doing that, you're only paying way more interest. It's like a 30-year mortgage for your home versus a 15. So if somebody says, well, I think I can do it in 10, you run the amortization, well, does this payment fit in the cash flow that you have presented? You're going to be further ahead to pay that loan off in the 5 years. But yeah, you tailor the terms. You could set it up on a smaller monthly payment for a year, increase it, escalate it. There's a lot of flexibility. Does that answer your question, sir?
Might as well keep the microphone, John. Can you speak to, different banks sometimes have a different appetite possibly for an industry. And the only reason I felt that is because at one time I owned a couple of hardware stores, and the appetite wasn't real good in some banks, but then in others it seemed like it was okay because we ended up getting a loan. Of course, this was years ago, but is that correct or not?
I believe that is correct. A lot of banks will try to specialize in various areas, and they all have their niche industry that they love to bank. Then again, other banks are more wide open, and we'll look at about anything that you bring forward as long as it's going to work, so it becomes a mutually beneficial and profitable relationship for all of us. So at Drake, we will look at just about any type of lending.
Great. Paul, so what are all the factors that should be considered when choosing a bank or banker besides just rate?
Sure, and to tag on what John had said about products, bank products are virtually the same. They're very similar. It's an industry where the products are very similar. The difference, though, really what a bank's product is its people, the people that are out interacting with its clients. And those appetites that you had brought up, those can be as diverse as the bankers that are working for the bank. Some bankers are very, very good at, for example, working with retail. Some are very good at working with manufacturers. So what the bank is really trying to put together is a broad array of not only products, but also of individuals that have a lot of experience with that. So I'm sorry, I just wanted to tag on that, but since I did that, I forgot. Well,
given all of that, banks largely offer the same products, maybe a little different interest in industry or risk, but how do we choose which bank then?
Right. It's just like trying to find an employee or maybe an employer. You've got to really reach out and make sure you understand the experience level of that banker in the industry that you're in. And therefore trying to find out a little bit more about the bank's appetite to see if that bank has some clients in your specific industry that they have some experience with. It would be very helpful for a business coming into just starting up and coming into its own to make sure that the banker understands what they're going to see down the road 2 or 3 or 4 years down the road rather than just making a loan and hoping for the best.
So you should interview your bankers too.
Absolutely. I think that's the primary focus that you should really spend your time on the front end to make sure you've got somebody that you can trust, somebody that will help to advocate for you. Really, from my perspective, my job is not to come out to your company and wave the flag of the bank. My job is to bring your flag into my bank and wave it and to say, this is a client that we really should spend our time investing our time and resources in.
Back to Bob. Buying a building versus leasing a space. Pros, cons.
I'm going to really irritate the bankers because I know they like the enhanced credit and the aftermarket capacity of doing commercial real estate with an operating company. I'll tell you right now that 95% of businesses should not own their building. If they want to own a building, own your friend's building or own something, other income producing asset. Diversification. If your business, your operating company gets stressed, the value of your building is substantially predicated on your operating company's ability to pay. So now all of a sudden you got this SBA 504 product and you're stressed as an operating company, good luck to you. Okay? If you're stressed as a tenant with a landlord, you go to your landlord and say, I need you to help me weather the storm. You go to your SBA 504 and do the same thing, good luck to you. Okay, you have personal guarantees, you've got your house, you've got your personal signature on that loan. So specific use situations are an exception to that if you've got a lot of tenant improvements. If your business is fairly stable, fairly secure, but would you be better off having somebody else pay off your mortgage and you have the flexibility in your operating space? So I would tell you as a commercial broker that it's very unique for owner-user, and you have to be a very established and stable square footage type business to make real good economic sense of that.
Lee.
I have kind of a follow-up question, I guess, for two parts of what you guys just talked about. One, could you speak a little bit more to how people find the right banker? Like, do I just walk in your door? And then two, the relationship between the banks and individuals like Bob and what he does, like how do bankers really facilitate some of those relationships and work with, once you bring me on into the bank, how do you work with me?
I think I can speak to that, and primarily for myself. You would think as a banker, I spend my day in front of a computer crunching numbers and reading over financial statements and calling borrowers. But really, a substantial part of my day is working with real estate brokers, just like Bob. I'm contacting accountants, CPAs, attorneys. I'm reaching out to people that we consider to be centers of influence. And what I'd recommend is that people that were interested in a business or either have an existing smaller business or starting one is to reach out to some of those people and have some conversations and look to see who they would recommend for their industry. It's very common that an accountant might have several clients in your industry and they have a few bankers that they already know of that they have experience in that industry as well.
Yeah.
So I don't mean to get too specific or go too far back because we were talking about industries 2 minutes ago, but I don't want to miss it either. So my specific interest is in tech startups. And whenever I've looked at other tech startups, it seems like the option is pretty much venture capital. And I'm wondering if there is a way to make it work with the bank, or if your recommendation is don't even try it, just go VC.
Tech has a particular issue in that when they're looking for financing, it's typically for research and development and working capital to be able to hire more people. From the bank's perspective, the issue with that is it's usually a good cash flowing proposition. There's usually good cash flow. The problem is there isn't a lot of collateral, or there's not a backstop for the bank. If you think about what the banker is really trying to identify, we're trying to identify 3 sources of repayment. The primary source is the cash flow that the business generates. If the cash flow from the business becomes impaired or you hit some kind of a roadblock, we're looking for what is that secondary source of repayment. And most commonly, the secondary source of repayment is the collateral of the business. So for a tech startup, the issue becomes what is that secondary source of repayment. Quite often the solution is venture capital because you're looking for more equity rather than you're looking for debt. But in many cases, you can use an SBA loan program to help mitigate the risk, help mitigate the bank's risk that sufficient collateral isn't available. Generally, the third source of repayment is the individual, the personal guarantee.
You know, landlords are more flexible. There's certain landlords I've worked with that have no problem giving you, let's say, of course, if you can use their space, they give you free rent for a year or two, and that'll be convertible. So it's debt convertible to equity if you ever makes some sense. So, but certain landlords are stressed and they don't have that flexibility. Certain are constrained by their institutional nature. If they're set up as a REIT or institutionally owned real estate, you know, they're typically not players for that kind of thing. So you need to get to the venture landlords to be able to make sense of that. The other issue is, do you need space? If you don't need space, how you're taking a real estate guy and putting them into your team, and what other asset do they bring to you? You know, they may bring money because they're networked in the community of entrepreneurs that have money, but some of them in the last few years, all their money is tied up, or they flat out don't have money. There's a lot of $10 million statements that are minus $2 million today.
I just want to go back to Lee's question. When you say, how do you find the bank? You have friends that are in business. It's good to ask them, who do you bank with? Why do you bank with them? Why do you stay with them? You need to establish the relationship between yourselves and your banker, not the bank. Because the banker is the one, as Peter said, that is going to carry your banner forward, getting that loan approved, working with you, helping you grow the business, determining when additional working capital may be needed, when you presenting to him when you need to expand and providing the numbers. So I've always looked at it that every team, you got the business owner, you should have your accountant, you should have an attorney, and you should have a banker. And those four people, while they're not your board of directors, they definitely become your advisory board. And that advisory board then keeps you on the straight and narrow. Banks, yes, are highly regulated. With, you know, startup business and IT, the intellectual properties, sure, there is value in developing them, but how do we value them and how do we go forward? A lot of startup businesses, if you don't have the money and you really believe in it, I've got a startup, well, it's a few-year-old startup right now, but this person said, Mom and Dad, I know you paid for my college and now I want to pay you back, but I need some working capital. I need you to give me a loan to get started. I need the seed money. And that's a lot cheaper than venture capital, and it's a lot easier to work with Mom and Dad like the landlord is rather than the SBA. So you got to pick the banker that works for you. And interviewing, talking to 3 or 4 bankers, there's nothing wrong with that. So that's my best advice for you.
Okay.
Well, thanks. John, maybe you can expand on the relationship part a little more, and you might have that question, Kathy, I don't know, but
Go ahead.
Going back to my business ownership experience, I did not learn that lesson. To keep that relationship with the banker, I'll let them know what's going on, you know, because they are there to help. I looked at it as I better not tell them because they may hold the loan or something like that. So maybe you can expand on how important that is a little bit.
You have to trust your banker. Your banker is going to keep your financial, personal information confidential. The more honest you are with him, the easier it's going to be for him to work with you and help you. I've had, in my many years, and that was going to date me quite a bit, but I've had a father bring his son in and said, this has been my banker for years. Son, you're taking over the business. Here's how we meet. You just sit here and be quiet and listen. And when we got done, the son said, I can't believe everything you just told the banker and how you talked and how much he knew about our business. That should be the goal, is establishing a long-term relationship with your banker so that you grow together.
I really like the relationship idea, but sometimes bankers move. How difficult is it if you establish a relationship with a banker to move with your banker should they change businesses?
You need to talk to your banker to see what his long-term goals and objectives are. I've been pretty much stable in about 4 banks my whole life. And I've had people that have followed me from bank to bank to bank, but we've had 10, 12-year runs together, and that makes a big difference. If I can just tell one little quick story. Back in the, well, we won't say when, but a number of years ago, a young man came in and he said, I just graduated from college and I got a job in the cities and I need a car. And I was banking Northern Metro at the time. I gave him a car loan. A few years later, he came back and said, well, I went to work for this other company and they need a bank. Can you help them? We helped him. He said, I can't work with them anymore. I'm going to start up my own business. And he said, I've talked to a bunch of different banks and nobody has faith and belief in me, but would you trust me? Made him a loan. His first year sales were about $400,000. Last year's sales were $35 million. And he still tells me to this day, you know, I thought you were nuts when you gave me that first car loan because I didn't have a job. I said, well, you were starting tomorrow. And he says, I still think you were nuts when you helped me start my business. And I say, well, look what you've done. You've proven yourself wrong in both cases. So those are the fun stories in banking. That's where the relationships come in.
Paul, I was wondering if you could talk to that a little bit of just, is there any difference between banks and how you form those relationships or what those relationships look like?
Yeah, I think they're as different as the individuals and the banks that they work for. It all comes back to the very early stages of making sure that you're comfortable with the person that you're dealing with on the front end. You're asking exactly what their plans are for the future and what their background is. Just like John had said, I've worked for 2 banks in nearly 30 years, but I've seen how painful it can be for borrowers to move from bank to bank to bank. It's not quite as easy as banking with Bank A today personally and then going and opening up another checking account at another bank personally. Because your business is, you have to establish that relationship and it is difficult. But that being said, the overriding value is really the relationship that you've developed with that banker. And by following them and staying along with them, you'll reap the benefits long term.
Thank you, gentlemen. The question I have is you both come from 2 wildly different size banks. Why should someone bank with a large bank or someone bank with a small bank? What is your opinion on that?
Good question.
I didn't understand that.
You come from different size banks, so kind of what's the opinion about working with a small bank versus a large bank?
Sure. Do you want to start?
In a small bank, Drake is a small bank. We're about a $90 million bank. We don't have the size, we don't have the number of offices that large banks have. It really doesn't matter how big the bank is or how small the bank is. You need to find a bank that's going to meet your individual needs, and you need to be happy and enjoy working with the lender that you're working with. And basically all the banks, as we said earlier, offer the same products and services. It's just, you know, what you're going to be comfortable with.
My opinion is, like John, it's not so much the size of the bank that's important. If you think about, for example, Bremer Bank, it's $10 billion in assets, but compared to Wells Fargo, we're a tiny little freckle. $10 billion in assets compared to $1 trillion in assets is very, very small. So in context, our bank is very small as well. The thing to really focus on is sometimes when you get into a larger organization, What the benefit is you have individuals in that organization, you have more individuals in that organization that have a wider breadth of experience, and those can be tapped into at different times. We like to say in the banking industry, one of anything, you're an expert. So if you have one trucking company, you're an expert in trucking. If you have one wholesaler, you're an expert in wholesale. And partly that is because it takes an awful lot of research and an awful lot of understanding for the banker to support that relationship. And with that being said, with a larger bank, you have more individuals with a wider breadth of experience than perhaps a smaller bank might be able to offer. But it doesn't mean that you discount that a smaller bank wouldn't have the right person that you need.
You know, from a customer standpoint, what I've run into is debt limits. And the old days, the small bankers would say, well, we can participate that out with other banks. Commercial real estate, when you're doing, you know, $5, $10, $20 million transactions, which is fairly common, and these are portfolio loans. So they're not just pushed through on the aftermarket like a single-family home loan or many SBA products are. And so as a result of that, there's loan limits because they have to keep them in-house. So you will find very quickly if your bank has got a $5 million loan limit for a truck terminal or for an internet company or for all these different categories. So certain lenders are very good at dental equipment or whatever it happens to be, and that's a kind of a hot spot. But the underwriters control that, and you can probably speak more to that than the rest of us.
I don't want to get into underwriters. You know, you brought up collateral, Paul, and I've run across a lot of my people I'm talking to who are trying to work with banks. I don't think they fully understand what counts as collateral.
Most often when you're talking with a bank, well, maybe I should back up. Usually what we look at is first what are the funds being used for? What are they funding? The loan request. Is it funding equipment? Is it funding working capital assets like growth in accounts receivable or inventory? We really focus on first of all, what the funds are being used for. If you're buying equipment with the loan funds, the collateral is going to be the equipment that you're purchasing. And what that does is establishes the secondary source of repayment like we talked about. If you have a line of credit, maybe you have some of your clients that pay you on credit, you do the work and they pay you in 30 days. You have an accounts receivable that's generated and a working capital line of credit would help to fund that. In that case, the collateral is the accounts receivable and the inventory that you're financing on behalf of your customer. You're financing those, but you're using the line of credit to do that.
Okay, we're good right now? What is an SBA loan, and how is it different than any other loan?
Sure. To maybe help illustrate that a little bit, the SBA is a federal government agency administration. The SBA stands for the Small Business Administration. It started in the early 50s. It was put together from a number of departments that really came out of the Depression era, departments that were generated to help spur economic activity. It was started in the Eisenhower administration to really help many returning veterans from World War II to help start small businesses. The primary reason that the SBA exists is for banks, we're required to have some form of a policy. Our regulators require us to have some form of a credit policy whereby we write down and document how we make loans and when we approve loans and when we don't approve loans. That credit policy is somewhat rigid. It's somewhat a fixed document that we have to follow. The SBA program is intended to help borrowers that don't fit neatly and cleanly into a bank's credit policy still obtain credit. And they do that by way of guaranteeing the loan of any future loss because of the banker stepping outside of that credit box, if you will. And they do that in the form of a guarantee. So, for example, a $100,000 loan that's guaranteed by the SBA would have an 85% guarantee. If for some reason the primary source of repayment fails and the secondary source of repayment isn't enough to pay back the loan, the SBA will guarantee that the bank would receive 85% of any future loss it would have. And they do that in return for a guarantee fee. So actually the program itself is self-funded. It's self-funded by the fees that the borrower pays on the front end. It's similar to an insurance pool. Those fees are pooled together, and then any future losses are taken from that program.
To piggyback on what Peter just said, we look at the SBA as a credit enhancement. It's mitigating some of the risk associated with the particular loan you're looking for. And we still need to underwrite that according to our policy, because if we step outside of the lines, the SBA is going to say, sorry, you've got a loss. This was not with your typical credit policy guidelines within those limits. We're not going to insure it. But a lot of small businesses will use SBA as that credit enhancement to induce the bank to go ahead and move forward with them. But we're still going to be doing the same due diligence, underwriting, and working with you to make sure that everything gets paid back and you have a successful venture.
Yes.
I guess more as a consumer or as a customer, for someone who's looking to buy commercial real estate, and the choices that they have would be a smaller community bank or a larger regional bank, or the insurance companies and some of those funds and so forth. Can you talk about the underwriting difference between those, the pricing differences and so forth, and what someone should be looking for if they're looking to buy a commercial real estate?
So let's take a look at a typical commercial real estate transaction, $1 million to $5 million type range. That's when you get less than $1 million, it's either residential or owner user, and that's kind of a different transaction. But in that range, life insurance companies will bounce down to $2 million of debt. Life insurance companies look at the real estate primarily, and they usually have more asset management capacity. They can hire the property management, leasing. They look at you as how do you want to say it, a quasi-employee of them. But at the same point, they don't look at you for your personal guarantee to the same level. So they will take a look at the asset first, and they'll usually put a 10-year loan. There will be some degree of recourse written into the transaction, but not necessarily to the same level as a bank will look at. So that's that end of it. They're fairly attractive, but at the same point, it's they're kind of slow to get. A bank situation, you've got the community bank, which has more limitations on it, but it has more personal relationship and flexible. Now, unfortunately, they have been very involved in real estate, and then all of a sudden the window slams shut, and it slams shut hard. And where the U.S. Bank and the Wells Fargo, yes, they changed their underwriting, and it kind of comes and goes, but it's not a hard shut. So there is a situation that low cost is good if it's a round hole and you put a round peg in it. U.S. Bank can have great rates. If you have a square going into a round, they just won't do your deal, where it still could be a great deal and a community bank would do that deal. So it really kind of depends on the asset and you as a borrower and how that whole underwriting works. But the other thing that is getting very aggressive right now is the S&L, savings and loans. They have a different regulator, so they can do things that the state and the federal people can't do. So they've been pretty aggressive. Apartments are funded differently. That's kind of a national aftermarket, and I don't understand it. I personally think it's nuts. I think there's a bubble. Farm is the same way, another big bubble. And, so what happens is every class of assets has its debt. The concern you always run into is if you can only find one lender for a transaction, guess what? What happens if that one lender doesn't want to do that deal after the loan matures, or if they call the loan? Because their personal underwriting changed, and now all of a sudden you're in non-conformance with what the bank is thinking about, and they find some way to try to push you out. So having competitive debt options is a huge decision for a landlord. And of course, that's a function of the landlord's tenants. So if the landlord's tenants are all mom and pops, that there's no capacity to enforce the lease because you can't go after them really when you're going to push a small business into personal bankruptcy and try and collect, good luck to you. So it's really a function, the better the quality of the tenant you have, the more debt options you have, which usually translates into the lower cost of debt. That creates less risk in the entire equation. I don't know if that answered your question, but I'm in it right now. I've got to either pay the government 50% of my net proceeds, or I need to invest my equity. So if you have any deals that have any business income or rental income, or could have any opportunity for me to make any money, I've got $100,000, got to replace $140 of debt, and then I'm selling 5 other properties that are the same. So it's 600 to, with a debt replacement of 850. So I've got 30 days on this first one. So if you got any needs, I will leave my business cards or come talk to me.
Yes.
So one thing you had mentioned earlier was personal guarantees, and you had mentioned it for actually purchasing a location, and you might get that on a loan. How common is it to see a personal guarantee on a lease? Because I've seen that before as well.
Absolutely. I mean, the landlord wants a personal guarantee as well, okay? Can you negotiate that? Yes. Okay. Well, what does that translate into? If you're mom and pop and the guy says, well, I want you to be all in, I want a personal guarantee because that's my boilerplate language in the lease, right? You say, look, you're not going to come after me personally and sue me and this and that. How about if I give you the last 2 months of rent in advance or something like that? Or maybe, here's the problem with most entrepreneurs. They want you to have, to fix up the space. You got a beautiful, fun space, brick and timber, hot tub, the whole damn thing in your office space, right? Okay, oh, yeah, my broker, he needs $4 a square foot because he's a nice guy. And then they say, oh, how much is all that? Oh, $80,000. And of course, you're all excited, you're full of, gas, and you say, landlord, you should just do all that for me. Oh, and I want 6 months free rent too, and da-da-da-da-da, right? And I want guaranteed options to renew at a cheap rent below market. All this stuff is nice, but in reality, you're not a bankable tenant. And so these banks look at the deal and say, when the landlord comes, hey, look at this new internet company, I'm all excited. And you show it to the banker, and the banker says, what are you smoking? Because my tenant improvements have to either come out of my pocket or they come out of his pocket, and it's all portfolio money. Okay, so that means it's actual bank money that they're taking it from. So, you got to be realistic in that whole dance. So yes, personal guarantees, if you have a statement, I can sue or I can bankrupt you and get the money, but most people don't. So that's why it's usually just the business's assets.
When you talk about improvements, there are some things that are cosmetic, but some things are basically code. How hard is it to get a rental space provider to, say, upgrade for a restaurant? If there were health department compliance issues, that should be part of the deal, shouldn't it?
Well, everything's money. Is the building a bulldoze? Most restaurants should be bulldozed and rebuilt. So that's the argument, is if there's enough credit, there will be enough of these guys behind that credit. Or if the market study is good enough, so they'll figure it out. But the answer is always maybe.
The market's in kind of a weird place right now. Interest rates are zero. The Fed's been hanging in there forever. When's that going to change, and where's it going to end up in reality?
Over the last couple of years, my crystal ball got kind of banged up and scratched and dented a little bit. So I'll tell you from my experience what I've heard and what I've seen. A couple of years back, whenever this topic came up, whoever had the microphone or was in a position of somewhat of a authority or had some intel into what was going on, what you'd hear interest rates are going to go up in 14 months. Why 14 months? Well, what that really meant was not this year. Okay? So we really heard that for quite a while. 14 months, we're going to see interest rates rise. 14 months, it's going to happen. Really, this first time this year is the first time in 7 years that we haven't heard 14 months. We've heard sometime this year. But interest rates are really a function of what's going on in the broader market. And what we're seeing is a couple of things. We heard that interest rates were going to increase in June. Well, a couple things happened. The oil markets sort of evaporated, and that's great for everybody that's buying gas, but that put that market into a lot of disarray. And also some things in the Middle East with political tensions happening in the Middle East. What these instabilities caused was foreign investment into the U.S. in the form of buying treasuries. And because the Treasury was being purchased at a relatively low interest rate, the interest rate doesn't have to increase to be able to find investors. Most debt, long-term debt, most debt is a function of where the 10-year or where the long-term treasuries are at. And as a result of all this investment coming in, buying treasuries, interest rates have stayed low as well. Now, where I'm going with that is I haven't heard any updates, but I don't believe that the oil industry at any point in time is going to start rebounding. We've seen a little bit, but also we haven't really seen any of the political instability settle down either. So my personal opinion, not of Bremer Bank or anybody else, but my personal opinion is that rates will continue to stay low as long as we have some of these unstable factors happening both here in the form of oil and abroad in the form of politics.
I think we're probably about ready to wrap up. Are there any last questions?
Let me ask myself one. One subject you had on there that we didn't cover is,
yes.
When do you hire a commercial real estate broker? Okay, and I started out representing a lot of small startup companies early in the career. I got more into working with investors that buy buildings, so I see a lot of rent rolls and deal with that side of it. Saying that, first issue is commercial real estate brokers create leverage for you. Having a lawyer represent you in court, a lot of times people do that, and they do that for a reason, i.e. to create a separation on negotiations. Because most things don't get settled in court, they get settled in the back room. And when you try to do that, usually representing yourself is not a good idea. You're saying that you still need to be involved in the process, especially as the first lease you sign. Well, the first lease you sign can either make you or break you. And either have a good attorney that you're willing to spend $5-10 grand on, or hire a commercial real estate broker that's part of the transaction. Now, hiring a commercial real estate broker, a lot of guys aren't going to work for $5-10 grand. Just understand that typical commissions are $30-40 grand. So it's not that easy always to get somebody to actually get out there and bust butt for you, find you the space, you want 1,000 square feet, et cetera, et cetera. So just normally agents answer your questions, going to give you some advice, kind of a la carte free. So when you go sign that lease, make sure you kind of understand the terms. You really don't have a lot of leverage unless you've got some credit or some business experience or a future sales contract or something in the future that shows that you're going to be real. But a lot of it is attitude. Do you believe in yourself? Do you have character? Do you have hustle? And if you've got those three characteristics, you can sell a landlord but it's going to take a while to push through 5 or 6 or 7 landlords to get there. And of course, you have to have space that works for you. So if you can get a realtor working for you, that's a huge step in selling you. Okay, so I do encourage that. I know it's not always easy to hire them, but you know, good luck.
Is that good?
Yeah. Thank you all so much. Oh, I've got a question back here.
I have a question related to manufacturing. Some organizations will buy equipment that then requires some customizations, and I'm wondering how something like that would be financed.
In a normal course of a manufacturing business, there is some built-in obsolescence in the equipment. There's new technology coming out. You increase your sales of a particular project. You're looking to add additional equipment to do it. The bank is going to be willing to look at that. There will be a down payment requirement, but we'll underwrite it the same as anyone else. Lots of times, leasing companies will try to put a lease in place for you. There is some flexibility with leases, but there are some restrictions with leases. So I think if I had to count the number of pieces of equipment I financed over the years, and I'm sure Peter can say the same thing, it's numerous. It's part of the business, and that's part of what you need to become more successful. That's what we're looking for. We want everybody to win.
And I know these guys will be right back here, so if we have more questions, we can probably grab them, and they'd be happy to talk to you for a little bit.
Yeah, thank you all so much, Kathy, John, Paul, and Bob, for being on our panel, and for Sage Credit and Drake Bank and Bremer Bank, and Bob, the Commercial Real Estate, for loaning us your team members for the morning. Really appreciate that. We are going to take a small break, and I think all the panel members are going to stick around, so feel free to ask them some questions, and then we're going to move right into 1 Million Cup St. Paul. And Luke from Abimath is back to pitch. I encourage you to stick around and hear that pitch, and then I'm pitching at 9:30. But grab some coffee, ask some questions, and then we'll round you back up for 1 Million Cups in just about 5 minutes here.